Hello and welcome to a fresh new edition of Closing Bell. This is, of course, the last hour of trade this Monday afternoon that's coming up. We are coming to you, as always, from the CNBC-TV18 News studios. I'm Prashant. With me, my colleagues Rima and Surabhi here, and Nigel is joining in from the newsroom floor. Guys, what a incredibly volatile day, but not very much to show for it at this hour.
I was just about to say, Prashant, I'm almost giddy, almost getting a headache because of the dramatic volatility that we've seen today. But I think the bulls will be happy because at least for now, 1 hour to go. But as of now, good recovery and lots of green on the screen. Guys?
I think we're still pretty much in that range, right? 21,800 on the downside to 22,300 on the upside. But Surabhi, don't get dizzy because we still got 10 sessions to go before we get the verdict. And I think we'll have to see more of the same like we saw in today's session. The big moving factor today is the Nifty Bank. That's up nearly around 600 points from the low point of the day. And that's the swing factor of the day, guys.
No, absolutely. And I think, Nigel, more than 10, right? 10? You mean the election?
10
4th
sessions.
June. Just 10 sessions.
Yeah.
Till 4th June.
I think around, no, actually it'll be a little more, maybe 15. Sorry.
Have I got the date wrong?
That's the weekend factor. That's the weekend factor. You have to wear off.
15, yeah.
All right. Okay. I don't know if it's 15.
And we've got the Saturday working as well this time. So.
Oh, gosh.
We've got to add that as well. So, yeah, absolutely. So, you know, it's been a big swing kind of day for markets. And it's, you know, really, it looked like down and out, 200 points at, you know, within the first hour, 1.5 hours, the Nifty was down 200 points. That's the kind of day we had. And from there was a sharp recovery, which again got sold into, not as sharply as in the morning. And then, of course, now we got this sort of latest move up, which is putting about 40 points on the board for the Nifty. So, you know, the Nifty is basically broken at one point, broken sharply below the trend line support, which stood at 21,980. We easily went 100 points below that particular level, 21,800 something. And then, of course, buying has emerged. The Nifty day low is 21,821. And the Bank Nifty also broke through its own sort of trend line support. And the day low there is 46,983. And one just wonders whether, you know, this phase of selling, we're kind of finished something and we can look forward to maybe a little more stability here. Hopefully that's the case. Pharma metals are doing the best, while auto stocks are under pressure. Political noise, heat, all of that, of course, is really coming in from all sides. And we play some snippets of that, of sort of various leaders and sort of, you know, what they're doing on the campaign trail, etc. Today, of course, is the fourth phase of the voting. And with today done, almost about 72% of the seats for the Lok Sabha would be done as well. So, you know, it's a big phase with another 96 seats in which polling is happening. Rima.
Hi, so about 15 working days are left, and if you add the Saturday, which is working, we've got about 16 days, trading days to go, before we get the election verdict on the 4th. But just putting some numbers on the kind of intraday recovery that we've seen, the Nifty is now hit 22,100, so that's the level we're currently at. As Prashant pointed out, the low today was 21,821. So from that level, it's been a solid 290-point intraday recovery. So nearly 300 points pullback from the day's low. On the Nifty mid-cap index, it's been an over 1,000-point recovery. The mid-cap index is back in the green. I think it's only the small-cap index which is left to get back into the green and recover. It's recovered quite a bit from the day's low, but it's still down close to about 0.4%. And banks now up close to about 300 points, and the Nifty Bank has snapped an 8-day losing streak with the up move today. The big gainers are pharmaceutical. There is that defensive tilt once again, and the numbers adding support to Cipla. So Cipla is now the top gainer on the Nifty. Divi's Laboratories up close to about 3.5%. Throw in a couple of consumption names, the decline in crude prices, boding well for Asian Paints. So Asian Paints higher for the second day in a row. You also have strength coming in something like a Britannia. HDFC Bank is looking up today, and HDFC Bank is providing that support. On the way down, Tata Motors, of course, the biggest casualty of the day. Oil marketing companies under pressure. Titan continues to lose ground, and another 1% is gone for Titan. And Titan has now lost close to about 10% since it came out with its numbers.
Absolutely. And Titan is one earning where there's not been much recovery, right? For a lot of other stocks, for instance, Cipla, and we'll talk about the factors there. Obviously, Mr. Umang Vohra clarifying, and soothing some nerves in that investor call. So Cipla has recovered. Asian Paints is seeing recovery. But Titan, no such luck over there. It's probably been one of the most disappointing earnings from the large cap universe in the season gone by. Just very quickly, some interesting stocks to point out. PSU banks are under pressure, and it's a very divergent case between Bank of India and Union Bank of India. And we spoke to both the managements. Now, the market seems to be buying the thesis that Union Bank put out a lot more than what Bank of India put out, though both managements said pretty much the same thing, that the rise in slippages on the agricultural side, that is seasonal in nature. Union Bank is saying their gross NPAs will actually improve. They'll come down this year. Something echoed by Bank of India as well, but Bank of India has not recovered. Union Bank is doing better off. Bank of India is still nursing a deep cut of almost 9-10%. So there you go. That's one interesting trend. The other I wanted to point out, look at Siemens. Siemens is surging 7.5% right now, perhaps in anticipation that it can do something which its peer already has. ABB's 11% move is absolutely breathtaking, and we'll discuss this with Vamakshi as we go forward as to what's worked so well. Yes, margins have expanded, but there's clearly something more in that, management commentary, that investor call that the market is like. Massive, massive move on ABB, and that seems to be powering Siemens as well. Other than that, Polycab has been the other, rising star after this quarter's number. 6% on Friday, put up another 4% today. Some very interesting moves in the mid-cap universe is the short point. And then, of course, we'll discuss more stocks. There's Zomato, plenty of others. So while at the headline level, the mid-cap index is flat, just about 0.2% up. These are the individual stories that we are tracking, which look very interesting today. Nigel, over to you.
Well, that's right. Surabhi, I know you listen into the morning chat as well. And last week I was, telling our audience that there was a lot of delivery-based buying that we saw in ABB India. There was long build-up as well in the F&O market. And even after that sort of a build-up ahead of its numbers, the stock is still rallied close to on 10%. Telling you those numbers are absolutely splendid. I think those margins are the highest ever we've seen, with the gross margins at more than 40%. And that's why it's getting a thumbs up, despite it being quite expensive. And what it's done, it's had the rub-off effect. Even Hitachi Energy, as you see, that has moved up by close to 7%. So ABB, Siemens, Hitachi Energy, all of them are running away in today's trading session. So select stocks are doing a thing of their own. Well, Mitesh Thakkar is back with us. Mitesh, well, I think in the morning as well, you had indicated that you won't be convinced with any kind of up move. From the lows, we have seen a bit of a bounce. Is this a good shorting opportunity? If yes, what are the levels you're looking at?
Good afternoon, Nigel. I've been negative for last many days, and we were indicating 21,800 as one of the possible targets. We got a low very close to that, 21,820, and we had some trailing stop losses which have got triggered. But the structure to me remains weak. So I think, this bounce back, possibly the levels which I would watch on the upside would be around 22,200, 22,220. Now, if that is not being crossed and we start filling around those levels again, then I think that will be a good shorting opportunities. Till then, waiting it out. I have one buy and one sell call. On the buying side is Pidilite, which has reversed very nicely in the last 2 days. So buy here with a stop at 29.35 for targets around 30.50. And Tata Motors had a gap down with that result news and the guidance, and still looking negative to me. So that's a sell with a stop at about 980 for targets of 920.
In fact, let's talk a little bit more about Tata Motors. That's the big Nifty loser today after the fourth quarter numbers, the disappointment on JLR margin guidance. Sonia joins us for more. Sonia.
Well, thanks a lot. There are two reasons why Tata Motors is under pressure today. One is that the commentary from the management was very cautious. They speak about how the FY25 EBIT margin guidance for Jaguar Land Rover is flat year on year. So they're not expecting any growth in margins. They also talk about demand headwinds both in the global as well as in the local markets. Apart from that, there are multiple downgrades that have come in on Tata Motors post the numbers because of the kind of price rise that we've seen in the stock. Nomura downgrades Tata Motors to a neutral. They have a target price of 1141. They say that the commercial vehicle growth will be moderate going forward, and JLR could also face demand risks. They say JLR has targeted an EBIT margin of 8.5% in FY25, which is flat year on year, and there are rising risks to the global auto demand. They also talk about how after the run-up, the stock is now in a fair value zone of 5.6 times FY26 EV to EBITDA. Apart from that, Morgan Stanley has downgraded Tata Motors to an equal weight. They have a target price of 1100. They say that Tata Motors, the numbers were good. They have delivered on all fronts. The business is performing well and execution is strong. However, a lot of the good news is priced into the stock, and there is rising competitive intensity in the passenger vehicle business, both on the India EV side as well as Jaguar Land Rover globally.
Thank you very much for that. Gurmeet Chadha is now with us from Complete Circles. Gurmeet, coming on Tata Motors. Now, Tata Motors was the best performing stock last year. It moved up 130, 140%. So it's hard to replicate the kind of performance that we've seen. But it also appears that a lot of the triggers maybe for Tata Motors could be behind. We've already seen Tata Tech listed. We've seen an improvement in EBIT margins for JLR, and maybe that margin expansion is not going to take place in FY25. The EV cycle, the environment is slowing down. Peers are launching, domestic EV models, so maybe they'll lose market share. What happens to Tata Motors from here on? What are the big triggers, according to you?
I think the street got a little, there was touch of disappointment on the guidance more than the numbers. I think numbers also, if you adjust the tax refunds, were a tad lower. And as you rightly said, it's run up, I think, almost 8-9 times since COVID. It was in 2-digit. So there's some bit of profit taking there. And it's okay. I mean, if you run up, 6-7x in 5 years and it takes 8-10% off, I think it's normal. We've seen that with so many counters, including, the really big ones. L&T reported a similar, not comparing again, but, had something very similar. My sense is, I think the next trigger is, the way they will split the business into two, separately between, CV and passenger car. They've said that it's going to self-sustain. They've been saying that they are on consolidated basis, they'll be net debt-free. So the future triggers would be eventual splitting of two and then maybe CV business taking over. I don't see any issues in the long run. I think they have the advantage of being the leader in PVs. And I believe that India is in a capex cycle, so I'm not too concerned even on the CV numbers as well. So I'll be a buyer on dips if it probably corrects a little.
Cut that. All right, Gurmeet, you'll be a buyer on dips on Tata Motors. Note that point. But let's talk about the result of the day. ABB India, it's been a big outperformer in the last 1 year or so. Even year to date, the stock has rallied considerably and valuations are not cheap. But Vamakshi joins us to tell us about those numbers. Vamakshi, you said it this morning as well. Those numbers were stellar. The margins were the bright spot out there. And the con call as well seems to have met street expectations. Vamakshi, tell us more.
Well, absolutely. A very strong set, like you rightly pointed out. It's a beat across all fronts. In fact, revenue came in nearly 7% higher than what we were expecting at 3,080 crores. And this growth in revenue is largely being driven by electrification as well as process automation. In fact, the growth was so strong that it managed to offset the sluggishness that was seen in motion as well as robotics and discrete automation. When we look at the margins as well, EBITDA margins were expected to come somewhere around 14%, but the margins have posted a very strong beat. They've come in at 18.3%, and in fact, margins in all the segments have actually expanded, barring the robotics segment. And largely, this expansion is not being driven by a one-off, but it is rather being driven by a higher share of service and export revenues, as well as positive price impact, as well as favorable material costs for the company. Overall, net profit is seeing a strong surge of almost 88% on a year-on-year basis. And other than that, when we look at the order inflows, they also appear to be quite healthy, up nearly 15% year-on-year. And in fact, this is the 5th or the 6th consecutive quarter where the company has managed to post an order inflow run rate of almost 3,000 crores. The order backlog for the company has also shot up by almost 25%, and this in turn provides very good revenue visibility for ABB India. Not just that, in the con call that was held today, this morning itself, the company said that the better performance could be attributed to the revenue mix, favorable material costs, and in fact, material costs have softened. New orders will be based on the adjusted prices to account for the fall in the commodity prices. Margins have improved in FY24, and the company aims to not fall below this level. They do not see any impact on the ordering activity from the ongoing elections, and in fact, they see significant private capex picking up in areas like data centers, automation, etc. And in fact, their focus areas, which includes data centers, railways, as well as metro and electronics, are expected to post a growth rate of almost 15% plus. So largely positive commentary coming in from the management. The stock is reacting very positively to those numbers.
Got it. Thanks a lot for that, Vamakshi. Gurmeet, what's your take on this one? ABB. The stock is now an 8,000 rupee stock, up 11% today. Your view?
Stellar set of numbers, Nigel, and despite a very high base, I think what's positive here is the mix. I think the electrification and automotion clearly leading the charge, and I think Street was very happy with almost 18% margin. And I think if you see last 2-3 years, they've been improving margins. So there was of late some concern that a lot of the orders were bit of a long lead, which had gestation period, and there could be some slowdown on election. We saw some bit of consolidation around March. In fact, the Street said that the long lead orders are almost 15-20%, but I think it's probably defied all of that. And great guidance. I think that's one. great improvement, great mix, good margins, and then you're guiding again 20-25% on this basis probably led to this rally. But valuations look very, very stretched, Nigel. Almost 80 times earnings and I think 40 times EV by EBITDA. I don't know if I can add further on this, but we'll be happy if you if you get this one at a little discount at the current price.
80 times forward earnings. Huh? We live in an alternate universe, I guess, at least for some of these stocks. But for what it's worth, they're still delivering.
Look at Siemens also today. I mean,
That's
I don't know if it's the Siemens rub, it's the ABB rub-off
effect. That's what Nigel and I were discussing. It's actually Hitachi and Siemens and ABB. I think maybe the market's expecting this kind of strength because, the sectors that they're pointing out, data centers, a couple of other sort of high-tech areas, which is where they're getting a lot of orders. Maybe the market thinks that the others can
Both of them
similar.
are up 70% this year. And the year is, some would argue, just begun, right? We're not even halfway mark, and it's up 70% this year. And of course, I think valuations, you just have to argue which is richer. Gurmeet said 80 times, but it's somewhere there, 70, 80, 90 times.
I mean, if you'd asked me maybe 7-8 years ago that can you think of a capital goods stock that will be valued at 80 times, I would have said no, but then the market is the greatest teacher. We all know that. Gurmeet, let's move on to the other interesting stock this afternoon, and that is UPL. UPL positively surprised the street, I think. I mean, the numbers are not as bad as feared. Now they're guiding for 4 to 8% growth on the top line. They're saying there'll be more free cash flow generation. They'll keep paring their debt down. Those were the highlights from the conversation we just had with the management. Now, what do you think of this? Are we at the bottom? Has the worst played out? Would you take a punt over here?
I think UPL had both performance and non-business issues, to be honest, Survi. And I think that's where probably you need, for a re-rating to happen, probably the management needs to demonstrate more on the non-business side. While I agree, in chemicals, I think if you go chemistry-wise, there are certain segments where I think the inventory destocking and the pressure looks like almost reaching the bottom. I think we saw Aarti doing a bit of a turnaround in Q3, even these numbers being a little better. We saw Naveen Fluorine and Fluorination reporting slightly better set of numbers. So if you are a little more patient and you can take further drawdowns because valuations have become reasonable, you can selectively maybe get into the likes of good fluorination companies. Aarti is more benzene and almost 5-6 levels derivative of benzene. Maybe Deepak also. So but as I said, you got to be a little more patient. You probably may have another one more soft quarter before the earnings really start to pick up. But seeing inventory restocking in a lot of sectors, I have a lot of clients that we speak to. I think even the end use demand seems to be slightly picking up. So fingers crossed as of now.
Gurmeet, any thoughts on the newest listing, Indegene? It's an interesting company. It's a tech product company which caters to the healthcare companies, the pharmaceutical companies, and it helps them with their sales and marketing, thereby eliminating the need for medical representatives. The financials look good, margins of 17-19%. It's been profitable. The stock is listed well at 30%. Thoughts on Indegene at current levels?
Probably would have listed more had the market sentiment being better. One golden rule is we stay away from businesses we don't understand. I haven't really understood the business model. I'm being very honest. I tried understanding it, but probably didn't get a good first-hand take on it. But it's on our radar. It seems to be a very interesting model, as you rightly said. Moment we get a more, we can grasp it a little better in terms of, end of the day, as a portfolio manager, I need to project earnings over 3-5 years. In this case, I'm unable to do that. Once I do that, probably I'll have a view around this.
Gurmeet, last time we spoke, you highlighted a couple of names. Ganesha Ecosphere was one of them, right? I didn't get a chance then to talk more about this one, but what's the story here?
So what has happened, Prashant, is that there's a government regulation coming up in 2025 where you need to use 25-30% recycled content in PET bottles. And then you also need to do it in MDPs. And, MDPs are used to make drums, which you use for, let's say, paints, oils, etc. Ganesha supplies recycled content and used to food packagers, PET bottles like, let's say, Coke, Varun Beverages, for food packaging companies to Haldirams, etc. of the world. And they also supplies, recycled textile content to textile makers and a lot of applications. Now in rPET, there is a fine of 5 rupees a kg coming next year. And then it goes up to 10 rupees kgs in 6 months and then up to 20-25 rupees a kg. So the annual demand now is almost 4 lakh tons for rPET alone, which is recycled PET. and the current capacity industry is a shade less than 250,000. And Ganesha has almost 140,000 with Warangal unit coming in. So what it does is that it increases the blended margin from, let's say, 11-12% to 14-15%, because the new rPET facility would probably be at 20-22%. And then, you see visible growth because there's a lot of demand. And waste management, especially plastic, is a big mess. I mean, our metros are becoming filthy. This is a genuine ESG theme. And they just did a QIP of 500 crores, of which promoters did about 150. My sense is this could be an interesting space to watch. But we are trying to look at some more options. We spoke to Technoplast also, who are into drum making in terms of what the impact on MDPs and all. I'm trying to maybe research more, but as of now, this is the one it caught my attention.
Gurmeet, I wanted to ask you about Polycab. I recall you all had that one. I'm not sure post the bad news what you all do with those positions, but that one's bounced back. And these numbers look very, very good. Good growth, good margins. They're gaining market share. Valuations at a premium, but maybe rightly so at around 35 times. Your view on the stock at these levels?
No, as Nigel say in cricket, let your bat do the talking. I think that's what the company has done. 25% market share in cables and wires now. And mind you, this is still a very unorganized sector. Possibly they will probably gain more. Good set of margins. I think if you remove a bit of an impairment on FMEG, I think if you can do a good job there, it can transition from a B2B to B2C company. And that's why the market is giving it a multiple it is. Only issue is that I just hope the tax thing is one-off, and I think we don't see incremental impact in terms of fine or penalties, right? I think that we'll get to know as we progress. But one learning is whether it was Mankind Pharma tax issue post-listing, whether it was Hero Motocorp a year back, whether it was Shree Cement. There's so many issues. I think the core idea is not to react, and fortunately we did not react. We allowed the event to play out, and I think I'm pretty happy that I think it's played out well for us and for our clients.
All right, Gurmeet. Okay, always a pleasure having you on and getting some perspective. Lots of interesting stocks that we discussed today. Thanks for joining in, and we look forward to the next call soon. Well, on that note, we do have to take a very quick break. On the other side, we'll have Pashupati Advani of Global Foray joining in with some perspective on the market.
Welcome back. PSU Banks on our radar, particularly Union Bank and Bank of India after reporting their Q4 numbers. We chatted with the managements of both the PSU banks on the outlook for FY25, the outlook on asset quality. Listen into excerpts from that conversation.
Net interest margin, I'm looking at something like 2.8 to 3%. Last year, we gave a guidance of 3%, and I was able to do 3.1. But this year, because we are looking at, probably a rate cut, probably in the second or the third quarter of the year. And so I'm looking at a NIM of about 2.8 to 3%. And credit cost, it had a slightly, deteriorated in the last quarter because of course, the slippages. It went up to 0.66. So I'm looking at something less than 1% in the current year with regard to slippages also. The loan growth, we are looking at projections of GDP growth at 7%. Usually the thumb rule is, twice the number or 1.5 times the GDP numbers. So advances growth, I'm looking at 11 to 13% in the current year.
As far as the slippage ratio is concerned, we are targeting a number of around 1.20% for the slippage March 25 slippage ratio. As regards the gross NPA number is concerned, you have seen that the gross NPA has come down from 7% plus to 4.98%. We expect further it should be at around 4% in FY25. So for the guidance for March 25 would be on the deposit side 11 to 12% and advances side 13 to 14%. So the guidance for the financial year 25 is on the net interest margin side is that our net interest margin on a global level should be at around 2.95% and this net interest margin on the domestic side should be at around 3.35%.
Okay, well, that's some banking sort of commentary, banking management commentary. Look at UPL once again, because, I mean, the stock had seen a big spike after the numbers, was up about 5%, 5.5%. Then it sold off. And now there is another sort of emergence which has come through. So 532 back on UPL. We'll have more with Hormuz as we go along. The market, of course, is doing much better than mid-afternoon or early morning. We're up full 70 points, which basically puts us at the day's highest point, 22,125 or so. Pashupati Advani is with us of Global Foray. Pashupati, good afternoon. Good to have you with us here. Thank you for your time. I mean, last 5-6 days, I mean, actually from the high that we made last Friday, that was the high, a higher high. We've kind of pulled back about 5-6% or so from those levels. What's your sense? We were just joking early on that on the show that there's about 15 days to go for the result. I mean, if it is politics which is making people a little nervous, there are a few more days of, in that sense, nervousness. What is your own sense and, how the market trades from here?
So actually what I see is that people who believe that Modi ji is going to come back with a thumping majority have been hopefully buying on dips. The FIIs have been selling slowly. I think one of the reasons why you've had these MNC infrastructure companies go down and come, jump up is probably because they've been sold off, and then after that they've been basically, people are obviously jumping back in. See, I'm a great believer that the infrastructure spend of our government is going to continue. And whichever government is in power, that money is going to continue to be spent. And therefore, these infrastructure companies, whether domestic or international, they're going to continue to do well. And that is what we are seeing. Again, India Inc. Has not really doing, they're only just starting to do CapEx. So then for them to come back in the cycle will take a couple of years. For those numbers to pop up. But what is happening is it's putting some pressure on the PSU banks because there are some banking generally is getting some pushback, as we're seeing in the Nifty bank index. And I think that the banks are having to deal with lower NIMs and as well as some maybe lesser NPAs, but there's still NPAs in the system. So I think that the combination is good. It's the market settling. But the reality is that, those who believe that Modi ji is going to come in, and I actually believe that they're going to get a majority, are looking to buy on dips, and it's a great opportunity. And those who believe that Congress is coming in, short the market. So it's a very interesting market trading position, which I guess will go up and down in the next 15 days. And that's good fun for those who are in the middle, who are the traders. Prashant.
As Pashupati, hi, good afternoon. As Nigel is, he's been telling me, listen, don't start getting, dizzy just yet. There's a lot more of this because there are 15 trading sessions ahead till we get to the final answer. But Pashupati, you were just talking about PSU banks, and for reference, I just want to pull up the one-year chart of the Nifty Bank and the PSU banking index. I mean, and the numbers are really a story in themselves. The Nifty Bank is up barely 10% in the last 1 year, and then comes the massive PSU banking rally, where that index has gained 70%. So 10% of a gain versus 70% of the gain. Now, the reason I'm asking, Pashupati, is because, some of the mid-sized PSU banks, we're seeing very sharp reactions today. Wherever there's a small miss on asset quality, maybe a quarterly rise in slippages, how would you read into this? Would you give some of these PSU banks a free pass? The managements are saying it's a seasonal thing, not much to worry about. Or is this a time for a shift? Offload a bit of the PSU, maybe get back to private?
Obviously, 70% gain means one should offload. The reason why, according to me, the Nifty Bank index has not really moved is because the real the two heavyweights which have not moved. One is Kotak, and those have not really moved with the market. So that's why they've been a drag on the Nifty Bank, because they're a major portion of it. And I think they have seriously underperformed the market. And I think that the consolidation of HDFC Bank into HDFC is going to take time. Yes, it will be a successful merger, but I think it's at least 3 to 4 quarters before you begin to see the synergies. And Kotak is also going through the same thing that probably ICICI went through earlier, which is some curb on new credit card issuance and things like that, while they clean up their technology platforms, which again have come under pressure. So it's good on the one hand. The RBI is holding the big banks down. It's not good for the market. Certainly not good for the bank index. But going back to your original question, I would definitely lighten up on PSU banks, which have had a good run, simply because these misses mean it's a precursor of things to follow. That's my reality.
And what about capital goods names like ABB, Siemens? Earnings are strong. We've seen earnings upgrades, in fact, post ABB's numbers. But the stocks are up 60, 70% this year. Valuations are at 80, 90 times. What would you do with them? And
so those one has to continue to buy into, because infrastructure spending is coming in huge from the government, and they all are using equipment that is from ABB or from Siemens to make it happen. We banned Chinese imports, so therefore Chinese cannot supply. These guys have come in and stepped in and are supplying, so they're all going to do well. And it's like, you have to take it at my price. It's no longer a Chinese price that is out there that is bringing the cost down along with Chinese quality. So I think it's good for that whole sector of capital goods. Rima?
Hi, Mr. Advani. Good afternoon. Right, let's get into some spicy new age themes. I recall that you were quite positive on Paytm. You got in, you got out at higher levels as well. The stock has got clonked back. So what's the view? It's added on 350 rupees. All the bad news in the price, or there is too much of uncertainty? You'll rather leave that aside. And what about Zomato? They were delivering gold coins, bouquets for Mother's Day. They're going across the spectrum. We have numbers today as well. Any of these two you like?
Again, the Zomato is now part of our lifestyle. I think it's not going to go away. The youth, which are the buying power, is actually full on into the Zomato Swiggy syndrome. So I think Zomato will continue to go up. Unfortunately, I have a small position. I wish I had been a little greedier, but I didn't. I just took a nibble and then it sort of went past me. As you said, I've been in and out of Paytm. I went in at the 400 and something level, so I'm down a little bit. But the reality is that that's a marketplace, but that's a marketplace without a payment gateway. They're supposed to be tying up with banks, but that tie-up is happening slowly, so they're actually losing their 4 crore FASTag users. They're being shifted to those banks, and I think Paytm is not going to get anything out of them. So that's not good. But as a platform, Paytm is there. It'll probably get bought by somebody, is what I guess, because without the bank part, it's it's got like a sort of bandaged leg, if you want to call it. So I think that it's probably an acquisition target, and the players involved may be quite happy to see it go, because they have got a lot of value out of it. And okay, the main promoters invested at high levels, but he's also made money the first time round. He's only averaged down, so averaged up, I should say. But that's what it is.
Speaking of Zomato, the numbers are coming in. There's a profit, that's number one, 175 crores versus the loss in the same period last year. And the top line has zoomed ahead about 70% higher. Stocks also now getting to the flat line, almost percent or so, still negative, but trying to recover. So it's the quick commerce, the quick delivery part of the business that is, the bet for a lot of investors, that could be driving the next leg of growth. And some, like I think it was Goldman Sachs, was saying that it could be actually worth more than the base food delivery business itself. That's a Blinkit for Zomato. Big revenue growth, 72%. We'll try and get Mangalam in with some more analysis on what the other internals have to say. Pashupati, what else? I mean, what else is catching your eye in the mid-cap market of late? Anything in mid-cap IT? Anything else?
So, going back to Zomato for a second, again, China, they used to 4 hours delivery. I think Zomato is making that a reality, because they've got the back end to do it. And as you said, it's like Walmart ended up with PhonePe, and PhonePe ended up being worth quite a significant percentage of what they ended up paying for Flipkart. And likewise, but Zomato, the challenge is, like everything else in this market, buy on rumors, sell on news. The results have come in; they look like good results to me, but the stock looks like it's getting hammered. So it's not, not so great. And they're making profit. I mean, at the end of it all, if you make profit, maybe they've got a margin and they're able to do it. So great for them. I think once the dust settles, it should do better. But right now, the stock is getting hammered like there's no tomorrow. It's crazy.
No.
Another one which is selling off very hard is Sirma. They, I think, reported numbers on Friday, and stocks down 16%, 16.5%, 17% right now on huge volumes. And look at that. I mean, that's again, a player in the EMS space, electronics sort of manufacturing, contract manufacturing, and it's so look at Sirma, and of course look at the leader, which is something like a Dixon. Dixon, of course, does a lot more than what Sirma does now. Although in that space, everyone seems to be doing everything. Dixon is at a new high, and some of the newer entrants in the listed space have not done so well. I mean, Sirma, of course, the high was, I think, almost about 700, and from there it's now under 400. So that is the picture on Sirma post the numbers. That's a very, very sharp cut coming through. Zomato, of course, is also selling off. It's down 5% now nearly. Margins are coming at 2.4%. So, at the margin, the company turning profitable, starting to make money. It's not a very, very new kind of story now. Stocks kind of reacted on that. And of course, now expectations are that now this is going to be a profitable story from here on. So that's one. And of course, we'll have to look at some of the detail in terms of what the expectations were and what they've actually delivered. But going down a little bit more, it's down about 6% now. Just under 190 rupees or so. Pashupati, great to speak with you. Thank you very much for your time. Appreciate it. And thank you for joining us here on CNBC. All right, 30 points on the Nifty. We've given up a little bit on the Nifty as well. So we were up 60, 70 points. And that's about 30, 35 now. 22,090 or so is where the Nifty is trading at. We'll take a break. More on Zomato. Mangalam should be with us with some details there. We'll, of course, get you some short-term trading ideas with the technical experts as well. Stay with us.
Welcome back. Well, Zomato is a stock actually that's moved to the low point of the day. So that's clearly the stock in focus. Looks like it's pre-positioning that's actually resulting in the stock getting clonked back. Mangalam will join us in just a bit. And another stock that's actually moving around in the last few minutes is Lupin. That's moved to the high point of the day. And APL Apollo Tubes as well. First reaction to the numbers was negative. The stock has already corrected 20% from the recent peak. But now that stock has picked up. It's moved into the green as well. Well, Mitesh is back with us. Mitesh, what are the calls you have for us for a buy or sell call for a reverse trade in the coming days?
So, Nigel, you were mentioning Lupin. I have, in fact, picked up Pharma, which is also a stock which is made of fresh high. So, BTST here with the stop at about 1162 and a target of around 1195 can be looked at. And the other one is Page Industries, where I would recommend taking a BTST call with a stop at 34,700 for target, buy call with a stop at 34,700 for targets of 35,650.
All right, got that. Thanks very much. Okay, what has gone so wrong with Zomato? Let's bring in Mangla. Mangla, we're scratching our heads over here because even sequentially that profit number has improved at about 175 crores. So what's the issue?
Well, the only issue is that perhaps maybe the street would have expected the growth from last quarter to continue into this quarter. But last quarter is a seasonally strong quarter. That's Q3. Apart from that, there's no real problem that is coming from the overall performance of Zomato. The reason why the stock would perhaps be lower is also because it's rallied over 200% in just the last 12 months. If you just take a look at the numbers that the company has reported, it's a 73% revenue growth that they've reported, 3,562 crores. On the EBITDA front, there is a gain of 86 crores. This compares to the loss of 226 crores. And that was pretty much understandable because, the company has been EBITDA profitable for the last 3 quarters. So the base quarter is the last quarter where the company reported an EBITDA loss. The net profit is 175 crores. Now, you would be, tempted to ask, why is it that the EBITDA is 86 crores and the net profit nearly double of that? That's because Zomato, with having around 12,000 crore of cash on their books, also has a large proportion of their earnings coming in from other income. That's about 235 crores, which is a jump of around 37% year on year. In terms of the food business, operating leverage is clearly playing out. Growth in the food business is lower than the overall consolidated revenue growth. That's because it's actually been led by quick commerce. So food delivery growth has come in at around 48% on the top line. The EBIT actually has grown at around 247%. So their margins have improved by nearly 1,000 basis points from 6.9% to about 16.2%. Quick commerce, and here's where the big driver has come in. 111% growth in the company's revenue out there in Blinkit. 769 crores is what they've reported on the top line, and they've turned EBIT positive. So from a loss of 179 crores same time last quarter, they've reported a gain of 2 crores, and this is largely in line, in fact slightly better than management estimates of being adjusted EBITDA profitable by the first quarter of FY25 or before that. Well, they've done that before that itself. Hyperpure has seen a revenue doubling, but on the operational front, it's still loss-making, around a 16 crore loss versus a 40 crore loss. But, all the parts are playing well for Zomato, where the food business is growing slightly shy of the overall company's growth, but contributing a lot more to the EBITDA. And the QCom business is driving the growth with about 112% growth and now has turned operationally profitable as well. Maybe a bit of profit taking is what we're seeing alongside, the street waiting for the management commentary on the way forward as well. But these numbers, not really anything to, suggest there's a big dip in the stock or no operational decay as the numbers are reported.
No, absolutely. Yeah, I've noticed that. I'm glad you pointed that out, Manglam, that quick commerce has broken even in this quarter. I don't know if you still try and nitpick. I mean, if someone wants to view this sequentially, then the food growth, the food business growth sequentially is actually very flat. They did revenues of about consolidated revenues of about 1,700 crores on the food business in the December quarter, and they're still around 1,740. So if you want to, quip over something and sort of nitpick, maybe that could be one reason. Manglam, your thoughts?
Yeah, that would just be nitpicking, because if you looked at the business sequentially this time around, there is an element of seasonality. You know that October, November, December as a quarter is seasonally stronger than what you see in Jan, Feb, March. And in that, if the food business is actually, the same as what it was in the previous quarter, that's a positive and not necessarily a negative, because it turns out that people are ordering the same amount that they did in the festive season, which is between October and December, as they did in between Jan and March. So that should actually be seen as a positive rather than nitpicking over no sequential growth, especially in the food business, because the element of seasonality out there.
Okay, thank you very much for that. Zomato is up 200% in the last 1 year, and what an incredible investment it's been. Zomato purchased Blinkit for $568 million just 2 years ago. And now that's, turned 568, I can see the wonder. And if you just remember, Goldman had valued Blinkit at $13 billion. So that's the kind of, re-rating that we've seen in Blinkit's value for Zomato.
You'll have the other player very soon in the market also. Swiggy. I mean, their IPO is coming, and so you'll have two. I mean, actually, it's a duopoly mostly. So you'll have both the players, Zomato and Swiggy, which will. Swiggy, of course, also has that Instamart.
Instamart.
Swiggy Instamart, which is which is very much there. Now, UPL is the other one that we've been talking about. It's up 5% after fourth quarter numbers. We had the management earlier. So let's just sort of wrap these numbers up. Hormuz is here with exactly that. Hormuz, the numbers and what the management told you.
Surprisingly, it came out as a profit compared to expectations of a net loss. UPL reported a 40 crore profit this quarter compared to expectations of a 360 crore loss. But that is also because there was a one-time component there of 105 crores that contributed to the profit. Excluding that, it's still a loss, but it is still a loss that is lesser than anticipated. So that was one positive. Now, for the debt as well, there was one of the key monitorables to watch out for, because during the December quarter, the management had said that from the current levels of $3.7 billion, they'll bring the debt down to $2.5 billion. They have managed to do that, to bring it down to $2.66 billion at the end of the March quarter. Now for FY25, they're saying that revenue growth will be 4 to 8%, the EBITDA growth will be 6 to 10%, and they're expecting EBITDA on an absolute basis to grow more than 50% in FY25 compared to a year-on-year basis. And they also said, when it comes to debt, that $300 to $400 million in operating cash flow will be used to pare down the debt. Now, we spoke to the management just a few minutes earlier. They spoke about the rights issue. Now, remember, the rights issue was approved late last year, and now they have shared a timeline that it may happen either in the second or the third quarter of FY25. So that's the timeline they've shared on the rights issue. They said that they'll generate up to $500 million through this rights issue, and that will also be used to further pare down debt, although they did not give an absolute number. But if you take a rough calculation, you'd expect UPL to end FY25 with a net debt less than $2 billion. And also, additionally, they said that besides this rights issue, they are also looking at other capital raising opportunities also, although they did not specify which were they, but they are also exploring other opportunities. Now, when it comes to geographies, they said that Latin America is a two-faced story. They said that Brazil continues to destock, but the rest of Latin America will continue to see strong growth in FY25, as has been the case in FY24 as well. Remember, Latin America is the core business for UPL. Almost 40% of their revenue comes from there. So there's strong commentary from Latin America. And for Europe also, they are expecting a strong FY25 from that geography as well, which was impacted partly due to destocking and some rains in FY24. So strong commentary overall from UPL. The stock has been an underperformer this year and as well as over the last 12 months. It has been excluded from the Nifty. It will be interesting to see how the street views this number and this commentary tomorrow morning.
Got it. Thanks a lot for that, Hormuz. Anand Tandon, market expert, joins us on the show. Hi, Anand. Wanted your view on UPL. That's been a rank underperformer, as my colleague Hormuz said. And actually, sometimes when this Nifty rejig happens, some of these stocks do bottom out, because there's a lot of selling ahead of that exclusion from the Nifty. And actually, once it's excluded, the stock is up nearly around 10% from there. We had highlighted this on Bazaar as well a few months ago. We said that, normally there is selling ahead of the event, and post the event, actually the stock bottoms out. What's your view on UPL at around 530 rupees?
Well, it hasn't been performing very well either, right? I mean, from a pure performance and earnings point of view, the fact is that it has become an extremely difficult stock to kind of forecast, simply because they are now operating in so many countries. And given the state of agriculture everywhere in the world, it is, there will always be some issues in some countries. That said, I think the kind of operational size and kind of depth that they have and the portfolio that they have, it is a company that will come back. So I think at the level that you are talking about right now, despite the small increase that we have seen in price, it is reasonably attractive, assuming that you have the patience to be able to wait for the cycle to turn.
Okay, Anand, the other space which is buzzing, right, is this entire capital goods and equipment manufacturing, Siemens and ABB and BEML and Power India and a bunch of other names as well. So BEML is what we're going to focus on next. Again, fourth quarter numbers came through. Stocks up some 14-15% right now. So let's highlight the numbers with Upasana. Upasana.
Well, the company has reported a good set of numbers, and we can clearly see the stock surging on back of the good Q4. Revenue is up almost about 9% on a YoY basis. EBITDA has also seen an uptick of 29% on YoY basis, and margins have expanded sharply, almost 380 basis points at 24.5%. In terms of PAT, the PAT has seen an uptick of almost 64% on YoY basis, around 257 crores. Now, in terms of order book, the company's order book positions as of 31st March stands at 11,872 crores, and out of this, 3,301 crore orders are executable in the current year is what the company has highlighted. What is important to note that in Q4 FY24, the order inflow has continued to remain muted, down almost about 6.3% on YoY basis. In terms of guidance given by the company, mind you, earlier company has given us a guidance of almost 20% revenue growth in FY24, which it clearly didn't achieve, and 20 to 25% revenue growth in FY25 is something we would be watching out for.
Okay, thank you very much for that. Anand, BEML, do you like BEML at current levels? And also weigh in on Syrma SGS. Many of these electronic manufacturing company, EMS as we used to bucket them, they were the darlings of the market. But now when you look at Syrma's numbers, margin erosion is quite prevalent. I think for Syrma SGS, the gross margins declined by more than 400 basis points. And the street is a bit concerned about how the product mix will play out. Where do you stand on these electronic manufacturing companies, and do you have a preferred stock there?
Well, most of them are dependent on some form or the other of support from the government. And the margins are so small that it is very difficult unless you have extremely great execution, which some of them have done, but not everybody can do that to be able to make money on a long-term basis. Your size keeps increasing, no doubt, and that's what's been most attractive for the market, because your top line growth is there, and to a large extent you have some kind of a surety that you will be selling because you're selling to on a pre-planned basis. But by and large, the margins don't leave too much on the table. At the end of the day, it's you're an OEM supplier, and you're not going to be able to make exceptional returns. The reason why somebody is giving you those orders is to a large extent because they don't want to do the hassle themselves for the amount of money that they are making out of it. Not a sector that I particularly fancy. As far as your BEML is concerned, it's probably one of the weakest PSU. Nothing great in terms of being able to claim technology or any kind of moat. And as you mentioned yourself, their guidance typically has not been met in terms of how fast they can grow. So while you could argue that it is one of the cheaper ones relative to many of the others, it is also one that has not performed so much. I think if you really need to go into PSUs, it is better to look at those where the product that they sell is so important that you cannot avoid or replace that.
Okay, all right, got that. Anand, stay on. We'll have some more questions for you, but we do have to take a break before that. Come back with more with the news that the market has managed to retain a little bit of that recovery. So we'll be back in the last leg of closing bell in just a minute.
Welcome back. Well, the markets are holding firm. If in the first hour of trade, someone would have told you that the markets are going to end in the green or 50 points up, you'd have grabbed it with both hands. So I guess The outcome today is pretty positive. The Nifty Bank has recovered close to around 700 points in the low point of the day, and that's the big swing factor. Well, Anand Tandon is still with us. Anand, I wanted to ask you about the space that went through a valuation re-rating and then a de-rating, the diagnostic space. Now suddenly the numbers are looking good again. Dr. Lal's is up close to around 10% in just 2 sessions, and the management sounded confident about volume growth. They're saying competitive intensity is going off a little bit, and they're focusing on volumes. And in relation, post these numbers, you have Metropolis as well that's moving up. What's your view on the diagnostic space, and any of these stocks you prefer?
So the space itself is interesting largely because you are going to see a continual kind of consolidation going on in the industry, right? That's what's been the major reason for the excitement in the sector. And there is no reason to assume that that will not continue. In fact, as the government becomes more stringent in its guidelines in terms of what is expected from a diagnostic company, and more importantly, as we get into more medical records and so on, which need to be digitized and standardized, it will become more and more difficult for smaller companies to scale and meet all the technology requirements. You are likely to see the consolidation phase playing out. And that is why the larger companies in the industry are certainly worth looking at. The challenge has always been in terms of the valuations. Are you prepared to pay 65 times, 70 times earnings for a business which is essentially, there is no, other than the fact that it is reaching out to the retail, it is fairly sensitive business in terms of the quality of reagents, the amount of time it takes to process, and the impact on the output. So it's a high-risk business without necessarily being able to distinguish one from the other. So yes, there are some major pros in it, and therefore at this stage, if we are looking at in terms of the industry, the larger players in the market are probably the best. So companies like Dr. Path Labs, etc., are probably best positioned to be able to take advantage from the consolidation.
Got it. Stick to the larger players. That's the call coming in from Anand. Anand, I also wanted to ask you about these pipes companies. Companies like APL, Apollo Tubes. They are making those equipments that's going to go, those pipes that go into infra construction. And obviously that's going through a slowdown ahead of general elections. The sentiment itself was a little bit weak, and that's why they pushed through volumes, but it came at the cost of margins. So stocks like APL, Apollo Tubes was down. Now it's recovered from the low point of the day. JTL as well was down more than 10% in the morning. That as well has recovered from the low point of the day. Do you like any of these stocks? APL Apollo obviously is the leader, trades at premium valuations. JTL is the one that got into that controversy because of that preference allotment. That one's going to give good volume growth, and valuations are more reasonable. Your view on both these two and the space on the whole?
So, in terms of pipes, I think I prefer those which are more infrastructure driven, like oil and gas, and to some extent water. Those are large government themes. More importantly, oil and gas has gone through a phase of underinvestment. And you can see that many of the companies which are, so these are all obviously high technology pipes, which require understanding of metallurgy as well as being able to create products which are highly regulated because they have to work in high pressure environments. Those are companies where the order books are beginning to look decent, and I think you're beginning to see some of those also move up. The APL type kind of pipe companies are more are triggered largely by the real estate kind of development, where I think there are better ways to play it. Now that's not taking away from the fact that obviously APL has done an amazing job in terms of being able to organize the sector, which kind of didn't exist before they were around. But how long that can continue, I have no idea. That's not a sector that I track very closely. And as I said, if you are looking at real estate, well, some of the housing finance companies have also reported very good numbers.
Okay, so housing finance could be one thought. Anand, just your thoughts. I mean, if industrial is a theme that has to be played, and given the run-up in stock prices, what's the best way to play it? I mean, we were just discussing this earlier, this huge reaction on ABB's numbers are good, margins are great, and other MNC industrial stocks like Siemens are running up in anticipation. I mean, Siemens is reporting numbers tomorrow. So do you stick to these winners? Do you look elsewhere? How to play a large industrial, the large industrial theme?
Well, I think the number of stocks that you can look at is fairly low, especially if you're an institutional investor, it is very low, right? I mean, for example, if you were to look at construction and engineering, you have to be buying a Larsen. It doesn't matter what kind of valuation it trades at, simply because there is very little else that you can be buying. with that kind of engineering capability and execution capability. Though those are one or two of those companies. The same goes with an ABB or a Siemens. I mean, if you're trying to play, for example, security on railways or even high-tech engines and so on, there is not much that you have in terms of choice other than to look at some of these names. Now, the question only is that do you expect really to be able to make serious money on it? And while there is right now a fair amount of euphoria, the thing is that these are cyclical businesses. These require strong capex, and right now, of course, we are at a phase where capex is picking up and has been going on because of the push that the government has initiated. So the order books will look at it and will look very good. But you cannot really, in my view, pay 3 times for the same thing. Once when the order book is announced, 2 when the sales come in, and 3 when the margins expand. They are the same thing. So at some stage, I think you have to kind of put your foot off the pedal and start looking for sectors which are less aggressively priced, because the likelihood of you being able to make serious money on this, to my mind, has become fairly low. So if you're holding on to it as a portfolio allocation, please continue. Fresh money, I think one has to be really careful. It's better to look at sectors which are still emerging or perhaps have not reached that kind of stratospheric valuations.
Quick word, Anand, on L&T. Since we are on the subject, how did you read the margin miss or the miss on the margin guidance?
Like I said, I mean, if you were to actually do a DCF for any of that part, you'll find it difficult to justify the valuation they are trading at. And, this whole idea that somehow there is a historic order book. Well, order book is there and it is historic as soon as it goes past 1 year. So, when we say, oh, it's got 3 years of order book and then turn around and say, oh, there is legacy orders, that's a very strange way of looking at stocks. Obviously, legacy orders will translate into real business today. And, what you're booking today will become legacy tomorrow. So the reality is that, as you go into the international markets, we've seen this before in L&T, right? They had a Middle East problem not 5-6 years ago. If you go back in time, you will see that, they were still running off their order book, and that was one of the reasons why the margins were low. Today, we are exulting because they're getting orders from the Middle East. So, I mean, one has to make up your mind, what do you really want to see? The reality is, as I said, you don't have a choice. If you're an institutional investor, you pretty much need to have L&T in your portfolio and the valuation be damned.
Okay. Well, I think
saying it very emphatically and clearly, right?
That problem that Anand was talking about, I think 10 years back, right? The Middle East issue, etc. Once again, I mean, orders are coming. The problem is margins again. Margins are lower in the international orders, in the Middle East orders, etc. But some of the, the management said upfront cash, etc. That kind of makes up for some of this stuff. But yeah, take your points, Anand. Good conversation, as always. Thank you very much for joining us. I think we're going to wrap up the market with what you have, which is about a 65-point pop on the Nifty, 22,120 on the Nifty. So, we started, I think, about 60-70 points lower, then went down 200, and we now end 65 points in the green. So there's great news. And lots of, once again, stock-specific reactions to earnings, right? I mean, that's been the real story. The Bank Nifty ends 0.75% higher. Something very similar happened on the Nifty Bank as well. We end 360 points higher, but at one point we were down very, very sharply. Mid-caps and small caps, small cap index down, mid-cap index up. So that is the indices for you today.
Well, a quick run through of the big movers in the large cap space. Cipla, top Nifty gainer, 6% higher. Asian Paints is moving up higher with the decline we've seen largely in crude oil prices. Adani Group stocks saw buying. A few more, FMCG names like Britannia were higher in trade. Pharma was the top gainer sectorally. The Nifty Pharma index up 1.8%. So Cipla did well, but along with that, Divi's Laboratory, Sun Pharma also higher. On the way down, Tata Motors 8.5%. The street disappointed by the JLR margin guidance. BPCL, NTPC, Coal India, State Bank of India, ONGC. So some of the PSUs still feeling the heat, and Titan, Nestle, ITC in the FMCG pack.
Okay, those are some of the major names in the large cap screen. Beyond the Nifty, I mean, it was really these MNC industrial stocks that were screaming, right at the top of the headline pack. ABB 12%, Hitachi 7.5%, Siemens, which is reporting results tomorrow, 7.5%. So these were big moves that were coming in. BEML from the PSU side actually, really eclipsing everybody else's move, 15% up on BEML. So those are some of the big gainers on the back of results. Otherwise, by the way, the Adani Group has had a decent session today. Adani Enterprises, even Adani Ports on the longer, on the other stocks,